You're watching the weekly Clever Markets Technic Analysis Outlook, this time for the week starting 12th of February 2024. I am based in Singapore and it is Lunar New Year, so Gong Xi Fa Cai for everyone, which essentially means congratulations, get rich, and I hope we can do that in the markets here. So we will start with the TTF as every week, and there was quite an exciting week last week. Nothing unusual, everything is working exactly as predicted for now, so hey, clever markets. Okay, so what we see on the weekly chart is that we are still well below the 23.6% FIB retracement. Just as a little reminder, so we have drawn in this down leg here, as we have had this down leg here, and we did bottom out 3 weeks ago with this doji candle, and we did get a little bit of like some bullish signals on the stochastic, so that was our cue to actually draw in the FIB retracements. Why do we draw them in? Well, they help us to anticipate how high the market could potentially go. And anything below the 23.6% FIB is still considered noise, essentially, for the midterm outlook. Yeah, of course, it doesn't mean it's not relevant for the lower level timeframes. But in general, anything below 23.6 is noise. Up until 38.2, it's like the shallow corrections, and then we have the 50 and 61.8%, which are like the deeper corrections to the underlying downtrend, right? So anything below here, I wouldn't really worry all that much. And last week, we anticipated that we might not make it far above the 23.6% FIB, and that is exactly happening. So here we see a bearish engulfing candle. So we have the red candle engulfing a previous green candle. Everything is already bearish, so there's no confirming new signals on, for example, stochastic. And to be honest, there isn't much to reverse. So here's the thing. All these reversal candles, so in this case a bearish pattern, need something to reverse. So ideally we would see an uptrend that then reverses with this bearish engulfing, and then we start having a downtrend. But I wouldn't really call these two candles an uptrend, but the sentiment remains the same, right? The idea is still the same. We opened the second week higher, but the bulls couldn't really retain any of the strength and they moved lower. So although by textbook this might not be classified as a bearish engulfing, the sentiment is the same. The bears are in charge. So what I want to see now is a move below 26.5, 26.6 for the midterm bear market to continue. So we are bearish. We are below the 8 and 12 exponential moving average. We are below the zero line on the MACD, and also we are not really getting any new signals on the stochastic. Here a little piece of advice. So we have been in oversold territory for quite some time, and that is completely normal for oscillators to be in oversold territory if we have a good trend going. So I don't want to hear that you and your colleagues start talking about, oh, the market is oversold, which means we must go up soon. This is not how it works. Yeah, it simply means that we are making new lows. So, and we obviously are. So being in oversold territory is not a bullish signal in and of itself. Okay, let's have a look at the daily chart. We gapped lower on Friday and we found support exactly at the 26.6, 26.5 support area here. Looking at the tools, I think we still have room to move lower. I feel it should be an easy break lower because we see that stochastic is showing us, yes, we are making new lows. Once again, this is not a bullish signal, being an oversold territory. We see that comfortably the 8 and 12 exponential moving average are bearish, and we also see that the MACD is topping out. So this bullish divergence that we have observed earlier now seems to be topping out. By the way, what is bullish divergence? It simply means that the market is moving lower, but the MACD is moving higher. So this was a sign of bearish exhaustion, which was true, absolutely, but bearish exhaustion doesn't mean a bullish strength, right? It simply means that we are moving a little bit sideways, which is exactly what happened. So I feel that moving below 26.6 is in the cards. Okay, now let's have a look at the 15-minute chart, and that worked out really, really nicely last week. So We did hit all the targets exactly as expected with a small triangle target. We broke below this and now we are heading lower. I want to see the 26.5 break. So which is where we are exactly, right? 26.6, 26.5. I feel that we might see a little bit of strength this morning, but I'm really just talking about a little uptick and then it continues lower. I believe that because we did end last week with a doji, which simply hints of like hesitation or exhaustion. And then we did have a green candle and we have a little bit of a hinging stochastic. So if we move above above the zero line, then we might get a little bit of a bullish signal. But I don't think it will last and will definitely not move above the 27.35. Well, I say it definitely will not. Let's say my bet is rather that we stay below it. And then if we like top out somewhere here, then we would still continue the flow of lower lows and lower highs, and we want to move below 26.5. And then, the bears will continue with strength. Once again, here we see that the MACD didn't really move lower. Actually, it did move a little bit higher as the market was moving lower. But we can already see that, we still don't have a bullish signal. We're still far away from the zero line. So possibly, and we are still making lower highs compared to this year. So overall, I think that, this year was not a good, strong finish for last week. But overall, I still believe that downside continuation is most likely. And then what becomes important then is that we actually start looking at the troughs on the daily chart. So even though if you are trading on the intraday chart, this could be like 15 minutes, or maybe even if you trade on the hourly chart, it is still important for us to look at the daily chart to look for important support levels, because here we do have 25.37 and also 24 coming up fairly soon. So keep an eye on those, even if you are trading intraday. One more interesting thing is that the large triangle here did generate a downside target at 23.88. And on the way lower, we might make use of some of the daily chart's support levels. All right, that is all for the TTF front month.
European energy markets have changed for good. No longer can we rely on the usual summer-winter seasonality, and once-in-a-lifetime freak events seem to happen every other month now. So, what do? How do we stay profitable even in the most volatile markets? Hi, my name is Marcello Colax and I am the Managing Director at Clever Markets, and also I am the host of the 7-week Clever Markets Technical Analysis Academy. We have opened intake now and we will launch the 7-week course on the 4th of March. So do make sure that you sign up. Our graduates are able to spot trends early, plan trades effectively and manage risk better. But what do our graduates say? Well, in 2023, we got a solid 5 out of 5 star rating across all categories, across all participants. We are also the only technical analysis firm that is about to be ISO 9001 certified, which is the global quality management standard. So you are in good hands. This course is suitable for beginner, intermediate, but also more advanced energy traders who already run their own fundamental models and look to make them more effective with technical analysis. Usually they can add trade triggers, directional confirmations and targets. If this sounds like you, then get in touch. I'll set everything up for you. And if you're still not sure, then hey, let's meet up and you can talk to me directly and we'll together figure out if this academy is the right deal for you. Until then, see you around and bye-bye.